What's up guys, Lee Ryder here, Crypto Didact, and in this video we're going to cover risk management. I get a lot of questions about this and I want to show y'all exactly what I do and how I'm thinking about as I'm putting out a trade in replay. So this might be a little longer because I'm going to replay tick for tick. I see a lot of people that they'll put a chart up on the screen and it's not very real to look at a chart in hindsight because all the action is on the right edge of the screen, and learning how to have the confidence and to take trades based off of the right edge is very crucial. So this is going to make it a little more real for you guys. Okay, well let's get to it. All right guys, well welcome to risk management. Now this is probably going to be a multi-part series, but this will get us going and at least get a good idea of what we're talking about, and then we can get into a little more specifics later. Excuse me. I apologize if I sound a little rough. I think I'm coming down with something, but shouldn't interfere. So what I'm going to talk about here is a trade that happened about 10 days ago. I'm going to give you a little bit of background about what I was seeing on the charts leading up to this, why I took the trade, how I thought about it, how I set my risk management. So let's get to it. Okay guys, well here we are. Now this is what I was actually looking at when I was looking to instigate the trade, and I'm going to bring the chart out a little bit further and we can see that this is on the 10-minute chart, by the way guys. I like to do 10-minute, 15-minute, 30-minute, hourly. Those are kind of my ranges where I do well at. So as we can see here, we had this big area, let me get my drawing tool, back here of a lot of rejection, and then right here we actually broke above that, right? And so what I'm looking for is kind of like a bounce play. I'm looking to buy into this area, only we're gonna do it over here. So let me show you what I was thinking, and we will get to it. Okay, so over here on the left-hand side of your chart, you're gonna see a volume profile. This is how I trade. Now, this is called a composite. So normally a volume profile would look at the 24 hours or the trading period. In crypto, it's 24 hours. In equities, it's gonna be your trading day, your 8 hours of trading. So in crypto, 24 hours, but I like the composites because what they do is they show you where we've been in the past. And what volume profiling does is it shows you where, at what price the majority of the volume has occurred at, and I like to use bell curves. This is a statistical study. You can Google that and look it up. I'm gonna make some more videos about it, but I just need to give a little bit of background so y'all can kind of get inside my head and see what I'm seeing. So if we look at this, this is a very pretty volume profile because as you can see, we have these nice, beautiful, normal distributions. And I don't know if y'all remember in school where it's called grading on the curve, where so many students are going to score in the middle of the range. So C's, then you're going to have some failures and a lot of or some A's, right? It's a bell curve. So this is the same thing I like to look for in trading. So if we see we had the price move up, this is that break. This area here is that break of those highs from before. And what I'm looking for is an area where price is likely to going to come back down to and then continue on with the trend. And so we can see that we're currently in this bell curve, and we can see right here that we very quickly moved and snapped back up, and that's because we have this void. This is like a vacuum, and when you have these vacuums like right here, this generally means that the price is either going to exit very quickly and reject the level and move away from it, or it's going to very quickly move through it. The fact that we rejected so quickly and went almost back was leading me to believe that we're probably going to test this level again. So what I did is I make what's called kill zones or kill boxes, and these are areas where the price could move within a margin and I feel good taking a position there. I don't need to, it's going to be impossible guys to time tops and bottoms and like buy the top candle or buy the bottom candle. It just really doesn't happen. I've had it happen a few times in my entire trading career and it feels really good, but very rarely does it happen. So on these time frames, now on a weekly chart, you're probably better off, you could probably do it, but your risk management's going to be so far skewed, there's not going to be much profit in the trade. So going back, so here is my kill box Let's see if I can remember this. Hold on guys, 1 second, I apologize. We are gonna be for a, what am I looking for here? Here we go. Okay, so here's my kill zone, guys. This is where I think the price is gonna come back to and reject away from. And so knowing that, I have to know that how much am I willing to bet? This is where your risk management comes in and planning out your trades. You need to know where you're gonna enter the trade at, where are you gonna get out when the market told you that you're wrong, and where are you gonna take profit at. So I'm a all-in guy, scale out. So I like to go all in on the beginning of the trade, and that's what I'm basing my risk management off of, and then I'm usually gonna exit in 1 to 3 take profit levels. So let's talk about that now. Now this is pretty important, guys, and I think this is very crucial that goes with the risk management. If you're not planning your trades and you're not planning your stops and your exits and you're not planning your take profits, there's no way for you to have proper risk management, because you're going to be relying on the moment and you're going to be looking at the price action, and it's just going to whipsaw you. So you need to go into the trades where you can basically just look at the chart, find a good setup, put in all your orders, and then be able to walk away from it and come back in a week and see if you made money or lost money. So we're gonna look, and I'm gonna try to show you what I was thinking, and we'll put them up on the chart, and that'll be it. So let's get to it. Okay, so if this is my level, I want to be entering the trade as the price re-enters this box. So I'm not going for I'm just going as it enters the box, and that's kind of what I'm thinking, right? So if I'm gonna do that, then I need to know, well, what's my stop loss gonna be, right? So I'm gonna enter, So I wanna enter my trade at about this level as it enters the top of the box. And then my risk management, this is where the risk management comes in, is how much am I gonna risk on this trade, let it go against me before I just get out of the trade. Because I'm assuming it's gonna come here and take off, right? But if it doesn't and it keeps continuing down, where am I gonna say that I am wrong? So this goes back to your trading mindset, right? So like I said, I like to risk 1 to 3% per trade. So that means when I put this on, my stop loss, when I'm wrong and I've lost the trade, that amount should be about 1 to 3% of my account. So in this particular trade, I'm gonna put on a lot size of two Bitcoins, and I wanna lose about $300. So if you do that, that means each one needs to be because each lot's gonna be 150, 300 total. So that's where I wanna calculate. So as far as my take profits, now I think that once we get down to this level, we will very highly likely continue to the middle of this bell curve. So my first profit level will be about in here. And I think really that because we're in an uptrend, we're gonna continue and we will go up this high all the way back up to here. So let's put in the orders and we can see it on the screen. And I will do that now. Oh, sorry. Okay guys, there we go. So there's our orders. We are gonna have, and I will probably start this so we can at least, this video won't run too long. But we're gonna start running the chart out, right? So this is my buy, this is my open down here. And so what this means is that when the price gets to this level, a trade will be fired off saying that I'm gonna buy a quantity of 2 at 74.80, right? If I'm wrong, this is my stop down here at 7,330. That means if I'm wrong, I'm gonna liquidate both of those positions, and this is about $150, so for $300 total in loss. Now, what I'm tracking here is my total. You can see that this is about 1.5 to here for my first target. This is about 1.5. But you can see this is about 1 to 3. And so 3x. So I generally like a 3x minimum, but it can be different for everyone. I would never recommend doing more than 1 to 2 or less than 1 to 2, because the odds are you're going to lose the majority of your trades. So if you're constantly taking trades that are 1 to 1 or 1 to 1.5, the statistics just aren't really on your side. So this is how I like to do it. I think it works really well in the long run. And ultimately you want to try to take trades that are in like the 1 to 4 range. So you're risking $100 to make $400. 1 to 2, you're risking $100 to make $200. So as we can see, as this price is moving, I'll kind of explain how I look at the market. So this volume profile, as you can see, these new little candles, the volume is increasing at these price levels, and what it's doing is you can see it's trading in the middle of this bell curve. You do not want to be taking trades in the middle of bell curves. You want to be shorting at the high end of the curve and buying at the low end of the curve, because the momentum and the volume is on your side. Right here, what this is telling me is that the price is basically trading at a fair level, that the market says this price is fair. When it gets into these levels, which is why it gets rejected so much, is because the market is saying, hey, this is not a fair price. I think this is the wrong price. So that's kind of that. So you want to be trying to trade at the tops and the bottoms, and not in the middles. You do not want to be in the middle. So as we can see, the price is moving along and it's starting to exit out of this range. It's being rejected by the value price. And generally what this is going to lead to is we're in a price discovery mode when you're outside of this bell curve. And what I mean by price discovery is this is why these are so beautiful, these 3 little patterns here, because this is telling me that this was a fair price, this was a fair price, and this was a fair price. And until we exit away from these levels, it's going to keep trading between these ranges. So we're getting close, guys, you can see. So yeah, so right now we're basically in price discovery between this level here and this level here. And as we've seen, I think, oh, okay, so we just got in. Okay, so this is telling me that we need to find out where is the actual fair price. So right now, like I said, I don't think it's going to go below here, because if it does, this is likely going to continue much lower, which is why my stop loss is down below this pocket here. Like I said before, it's a vacuum. This is going to be, hold on, sorry guys. Yeah, so those little pockets are vacuums, and so if they go through these, they're normally going to continue down a lot higher. And so I usually like to fade these areas, which is exactly what I did here. I faded saying, hey, this is definitely value, and I think actually the price should be higher. So that's kind of what the market's telling us. You can see we're getting up to our first target level, and we'll watch it and see if it goes. Yeah guys, so this is it. We can keep watching it. This is just so important that you plan your trades, because I can basically get up now, walk away from the computer, and I'm not stressing about what's happening, where's the market moving, am I losing money, am I making money. It really doesn't matter. Okay, you can see we just got hit, so we just exited half the position, and this is now, we are now back in the middle. And so like I think we already rejected this node back here, and so likely we're going to try to go higher, because that's what price discovery is. That's how the market moves. This is auction theory. If people didn't think that this was value, they're either going to sell it or buy it. And we've seen 2 rejections now of this level, and so I think we have good odds that we're going to continue moving, and that is all determined by this volume profile right here. These are so important, guys, and they will really change your trading, because they're gonna this is where people are voting. Price is so fluid, And it's a good measure, but it's not a great measure about what's happening, because that just shows you there could be one trade made at that price level and it's going to show up on your chart, on your bar. But the volume profile is showing you where people are putting a lot of their money at and where they really think that this is gonna move. So yeah, guys, we're in the profit. We're up, you know, we got 234 on our last position, which means we've already made our money, and now we'll just continue to watch it. So I'm probably gonna fast forward until a little bit further, because y'all probably don't want to listen to me talk for that long. So we'll see y'all in a bit. Yeah, guys, so planning is so important, because as of right now, I can just walk away from my computer. I've already planned what I think the market's gonna do. I've already planned if it doesn't do what I think what's gonna happen. I know how much money I'm gonna lose. I know where I'm gonna take profits at, and I know how much I'm gonna make or lose from the very beginning. And when you do this with all of your trades, you are gonna see your P&Ls go through the freaking roof. Because right now what you're doing is you're being an emotional trader, and as you're watching the chart tick through right now, it's probably a little bit stressful, because if you don't have your stuff planned, it's stressful, because you're constantly don't know what the hell's going on, and your brain is a goal-oriented machine. And so we need to know what exactly we're doing, and this is crucial, guys, to being a successful trader. And actually, I'm sure you've noticed, just having these lines up on the chart of where we're losing money, where we're taking money, it's probably less stressful already. So we're getting back up to the range, guys. Let's get back. Okay, guys, you can see we're hanging around the middle of the range right here right now. So that means we're back to value. So this is what's happening. We're getting into this range bound situation where everyone's like, well, this seems like a fair, oh, there we go. This seems like a fair price, but is it really? So that's it, guys. It looks like we're gonna break out of the range, and yeah, let's keep watching. So you can see, guys, we're still trading in the middle of the range here. Like I said, this purple line is called the point of control. This is where the majority, this is the highest volume spike. So right now, right around this level is where everyone's saying that's what Bitcoin is worth at the moment. And this is what we're trying to find, is it worth more or is it worth less? So that's something that we'll continue to watch as this plays out. Alright, so while this continues to play out, let's recap what risk management is. So risk management is capping the downside. So when we get into a position, we want to know how much we're going to lose. What is the max we're going to lose? This is why equity traders love options, because options they're capped to the downside. They know how much they're going to lose, and that is the most important thing. It's not how much you're going to make, it's how much you're going to lose. And this is such an overlooked thing in trading, that everyone's focused on how much money they're going to make, and what happens is they usually give up more money than they make because they're focused on the wrong thing. You have to be focused on what you can lose, and you want to make sure that you're setting a good target. So let's get back to it. Okay, guys, it looks like we're about to hit the target. Yep, there we go. We just got hit. So that's it, guys. That is setting up risk management and planning a trade out. So I hope y'all enjoyed. I really hope y'all enjoyed this. I know it was a little longer than normal. Let me know in the comments below if you liked this ticking through the market and kind of talking through it. And thank y'all for your time, and we'll see you in the next video.